Hello everyone, this is Ross with Market Traders Daily, and this is today's video analysis for January 21st, 2020. Today we're looking at the USDCHF, the US dollar versus the Swiss franc, for today's trade analysis. Starting here on the daily time frame, we can see a couple of things. First, the downtrend. That's pretty easy to see. The black trend line on the right-hand side. Lower highs, lower lows. We reached a low at the very bottom of the chart, getting the crosshair. We're looking all the way down here towards the 96.13 level. Bottoming out, making a little bit of a rebound over the past 3-4 days back into the mid to upper 96s. 0.96 7590 is the green shaded area, so we've rebounded a bit from that spike low, but still remain well within the boundaries of the downtrend. A couple of things about the green shaded area, 96 75 96 90. Look back to the left hand side, black circle, you can see historical support into that same area. So support back there. We also, not too long ago, a couple of weeks ago, saw support there again right here. So two black circles represent support into the green zone. Today, we are underneath that green zone, and the past 2 days have been underneath that green zone as resistance. So we not only do we have the down black trend line, but we also see historical support acting currently as resistance. Now, it's pretty clear that as long as it stays underneath the green zone, we're hitting resistance. That's what it's done the past 2 days, and now the third day in a row, we're hitting into resistance at the green zone. Not only that, it's pretty clear that we're well within the boundaries of the downtrend because we're still under the black trend line. And we really haven't created a higher low yet. We've created lower highs and lower lows. We haven't created a higher low or higher high on the daily time frame. So interesting there. The green zone is the main area that we want to focus in on. Let's go ahead and zoom it in a little bit, and you can see what's been happening again. Not too hard to see that as long as it's under the green zone, we are holding that as resistance, and only. And this is the risk, and this is the possibility that is if it gets above that black trend line green zone 96.90, we would look for it to go higher. So currently holding resistance, trend line, green zone, and only above it is the risk that it will go higher. I've taken Fibonacci from the last little high here to the lowest low. 50% sits at 96.87, just top of the green zone. 618 up here closer to the blue zone. So clearly, if it breaks the green zone, the blue zone would be our next target higher. We do have 236 fib sitting down here at the orange zone. Of course, a break of the orange zone, we would look for a new low within the direction of the downtrend. Let's go ahead and take it down to the 4-hour time frame. You can see what's been happening over the past couple of days. Look at it, just stuck right here inside this green shade area. It doesn't really change anything. It's either going to break above the black trend line green zone and go up, or it's going to stay within, break back underneath 96.75 and go back down. You have a couple of opportunities here. I don't think you buy it right now. That doesn't make any sense at all. Buying right now seems a little bit dangerous. There's not very much profitable opportunity there because so far it's been unable to break 96.90. So your profit opportunity here is very limited to the upside to 96.90 because there's no confidence, no indication that it's going to break 96.90, the green zone and the black trend line. So no indication it's going to break there. So until it breaks the green zone, I don't think you buy it here. I do think that there are opportunities to go short into the green zone. Probably the higher you can get inside the green zone, the better. Your risk, your stop loss is going to go above the current resistance high, which isn't that far away, truthfully. We'll just put a red line there, represent a potential stop loss. We're looking at above 96.99. So, you're talking about 97, 97.05 potential stop loss if you take a short from the green zone. The higher you can get into the green zone, the better. Let's say, 96.80, you're looking at maybe a 20 pip stop loss. If you can get 96.85, you're reducing that to 15 pip stop loss. So the higher you can get into the green zone to take a short, your stop loss is going to be smaller. I think you can target back down to the orange zone, 96.50 or lower. Of course, if it breaks the orange zone, we'd look for it to go lower. So your risk reward is much better for being short than it is for long right now on the dollar franc, but also we are in the direction of the trend if we take a short for the dollar franc today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.